Okay, what's more volatile than Bitcoin, folks? Well, as it turns out, it's the bond market. Believe it or not, it has been over the last 6 months 7 times more volatile than Bitcoin. And the bond market's what drives the mortgage rate. So let's talk about it. Only 2 other times in history since World War II have we seen both the bond market and the stock market down in the same year. Why? Well, when the stock market's not doing well, people are fleeing to bonds and vice versa. Well, this year is now the 3rd time. And what does that mean for us for rates? Well, that means it's not uncommon to see a 0.5 point jump in interest rates in the morning, a 0.5 point jump down in the afternoon, a 0.5 point jump back up by the time things close. It's just absolutely nuts on a day-to-day basis. You'll drive yourself crazy if you're following it that close like I do. Rates are still hovering around that 7% range for that perfect bar with large down payment, single family, all that fine print you see when you're seeing things quoted online. They're hovering somewhere around there. So let's talk other news. Well, recession seems inevitable at this point, so expect that coming to a theater near you. Housing prices actually are up 13.2% this year. They're not expected to continue that rate, obviously. They're expected to slow. And again, I am not predicting a housing crash or saying there won't be a housing crash. I'm just telling you what people smarter than me are saying, which is they're saying we're not going to have a crash. They feel we're just going to see some slower appreciation in the 2 to 3% range, which is a little bit more normalized. And honestly, the supply-demand numbers seem to support that. No matter which side of the fence you're on, you have to kind of agree with that. It does support it. The national average 1-bedroom is renting for $1,500. The national average 2-bedroom is $1,845. That's up 11%. So that's huge. So the question is now a good time to buy? I keep saying it, the right time is really up to you. Can you afford the payments? If so, it's probably the right time. There's a reason the average homeowner's net worth is $300,000 and the average renter is $8,000. There's a reason that over 90% of millionaires are made in real estate. Get in now, refinance if rates drops. If they don't, which is unlikely, but if they don't, if you're comfortable with your payments right now, you start building your equity today. So more info to come by the end of the week. We'll keep you posted on where things are at. We'll talk to you soon.